Hey there. I just wanted to do a real quick video, and talk a little bit about invoices and sales receipts and how they're used in QuickBooks, and then the use of a credit memo and a refund when you need to do that. Anyway, so real quick, down and dirty, when you want to use an invoice is if the customer does not pay at the point of sale. Okay, when the transaction is made, you make the sale, an invoice is actually recorded at that time. Okay, that means the customer owes you, so it's an asset to you in our record keeping system. Okay, the time you use a sales receipt is if they pay you at the same time the transaction occurs. So if you're at the stack of hay and you sell 2 tons of hay to a customer at $80 a ton, and they write you a check for $160, then that would be a sales receipt that you would make out for that particular transaction. So the payment has been made. You would receive payment only if you have a prior invoice that's made. So that's how that's used. Now let's just say, and we have this happen in chapter 3, is that a customer actually is billed for more on an invoice than they actually get. You could do a credit memo, but the easiest thing to do is just, since the customer has not paid anything on it yet, all you have to do is go into the invoice, change the invoice or correct the invoice, and record it. Actually, you'd want to print it out and reissue the invoice. That's all done at that point. The time that you would actually do a credit memo is if the customer has already paid on an invoice, or they had paid you and you had actually transacted a sales receipt. Okay, so that way you would actually show some credit and then issue a refund check as the next step after the credit memo in that case. So those are the times that you use an invoice, a credit memo, and a sales receipt. Hopefully that helps a little bit. If it doesn't, give me a call and I'll square it away for you in another way. I'll figure out another way to tell you. Okay? Until next time.